Ladies and gentlemen, good day and welcome to the Protean eGov Ltd Q1 FY25 earnings conference call. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Pushpa Mani, Head Investor Relations of Protean eGov Ltd. Thank you and over to you, ma'am.
Thanks, Sejal. Good evening, everyone. We welcome you all to the Q1 FY25 results discussion. You must have received the results and investor presentation of the company, which is available on BSE as well as on the company's website. As usual, we will start the forum with the opening remarks by our leadership team. We will then open the floor for your questions. Should you have any queries that remain unanswered during this conference call, please feel free to reach out to us. Management on this call would be represented by Mr. Suresh Sethi, Managing Director and Chief Executive Officer, Mr. Jayesh Sule, Whole-Time Director, and myself, Ms. Pushpa Mani, Head Investor Relations. Before we begin, I would like to mention that some of the statements in today's discussion may be forward-looking in nature, and we believe that the expectations contained in this statement are reasonable. However, these statements involve a number of risks and uncertainties that may lead to different results. With this, I would now invite our MD, Mr. Suresh Sethi, to give opening remarks. Thank you, and over to you, sir.
Thank you, Pushpa. Good evening, everyone. For joining us for the Q1 FY25 earnings call of Protean eGov Ltd. We are grateful for your continued support and interest. I will start by talking about the financial performance during the first quarter of this fiscal year. The revenue from operations has decreased by 11% year on year. This is largely due to the fact that there was a degrowth on the overall issuance of PAN cards across the industry, and this in turn is attributable to the election activity during the first quarter of this year. Despite that, the company witnessed significant gain in market share within the PAN business. Our market share improved from 50% in Q1 FY24 to 54% in Q1 FY25. This largely arrested the degrowth impact coming out of the overall industry slowdown. The total number of PAN cards issued by Protean in Q1 FY25 stood at 1 crore, and this was equally split between online and offline PAN card issuance. The segment we believe will continue to see momentum in the coming quarters on account of strong central and state government focus on introduction and saturation of various government initiatives and welfare schemes. Further, India's young demographic continues to add nearly 12 million new workforce entrants every year, which will further lead to continued demand for new PAN issuances. Along with the tax business, our other businesses, the pension services business posted a healthy double-digit growth of 13% year on year. During the quarter, 2.25 million new subscribers were onboarded for Atal Pension Yojana, registering a growth of almost 25% year on year. We also added 0.29 million new subscribers for NPS. This was a growth of 21% year on year. Also, during the quarter, 760 new corporates were onboarded. The pension sector thrust was also received from the current financial budget. As we saw in the budget, there was a proposal to include minors into the NPS scheme. This significantly widened the NPS coverage and expanded the market to approximately 40 crore minors coming into the ecosystem. This makes NPS a more inclusive life cycle instrument, promoting savings from an early stage. There was another initiative called out during the budget, wherein the NPS contribution by employers for private sector employees 40% from 10 to 14%, thus making it a much more lucrative instrument for saving. These developments again clearly show the strong intent of the government in driving the pension penetration in the country. As stated earlier, we continue to maintain a 100% market share under the Atal Pension Yojana, the flagship scheme of the government for the economically weaker sections of the society. Given the nascent stage of the pension industry in India and the strong support provided by the government, we remain very optimistic about the future growth in this line of business. In terms of our identity services business, again, there was a significant thrust from the finance budget, as we could clearly see that this business is more aligned with our entire digitization thrust across the country and is towards making digital payments and enabling digital lending a big opportunity. As a result, we saw significant double-digit growth also in this line of business. There was a year-on-year growth of almost 27% coming for this business. And we see again, along with India's digitization story, this continues to become a very strong vector of growth for us going forward. Coming to the new businesses, aligned with India's visionary DPI framework built on open standards and protocols, Protean continues to expand its multi-sectoral reach towards e-commerce and transport, coming under the vertical of ONDC, education and skilling, coming under HONEST, which is online network for education, skill and transformation, agriculture and health. Over the last few years, the company has accelerated investments in people, products and technology and built centers of excellence in open source and open standards tech stacks, contributing to multi-sector ODEs at an infrastructure and innovation level. During the quarter, we delivered several groundbreaking projects of national importance and launched a series of new products committed to drive economic empowerment. Let me start by first talking about the Agri-Stack. The Agri-Stack establishes a robust framework for seamless data exchange between farmers, government bodies, and private entities. This stack is being created as a DPI, a digital public infrastructure, which is designed to revolutionize the data management and information sharing within the agri sector, leading to enablement of multiple use cases, starting from agri lending to agri marketplaces to insurance and advisory. Agri being primarily a state subject in India, this also means that data will reside in states in disparate formats and structures. By providing a DPI approach to it, it will empower stakeholders across the agricultural ecosystem to make informed decisions and optimize agricultural practices. Again, as we saw, the finance budget reflected a very strong government intent and continued support for creation of DPIs. There was a clear call out on multiple sectors of the economy, ranging from e-commerce, agri, education and skilling, health, law and justice and logistics. There was equally strong focus on creation of DPI apps and enablement of various MSME services, including credit leveraging the data DPI. With regard to agriculture, call-outs on land record digitization, creation of crop registries, and issuance of Bhu-Aadhaar, identity linked to land holding. So all these initiatives therefore become very convergent with the thrust that the company has in the area of building and providing and contributing for digital public infrastructure. Along with Agri-Stack, during the course of the last quarter, we also launched Protean X, which is supporting digitally verifiable credentials. Just like we have verifiable identity, we are talking about now verifiable credentials, which takes it to the next level. This is a future-ready solution enabling individuals and organizations to create, verify, and store credentials using blockchain-based technology. Clearly over here, we are looking at use cases, whether it is with regard to sharing your information in the form of certificates, sharing your information in terms of your land records in the agri stack. As long as you have verifiable data, you are able to secure and consume services using the digital public infrastructure. So Protean X provides a very important linkage in creating a verifiable credential DPI, which will work across multiple sectors of the economy. Along with Protean X, we also launched eSign Pro. The aim was again to strengthen and enhance one of the most critical DPIs, which supported digital signature and stamping products. It is again designed to cater to multiple sectors of the economy. This looks at sectors like BFSI, real estate, healthcare, education, and enables you to digitize documents like customer onboarding, legal agreements, student certificates and records at a fraction of the cost. It will enable creation of paperless journeys, and we anticipate a widespread adoption of eSign Pro. Our other new business verticals in the space of cloud and infosec, data stack, and international business, while at a nascent stage, are also demonstrating early wins and promising growth. Our balance sheet continues to remain strong with cash and cash equivalent, including marketable securities of more than 700 crores as on end of quarter one FY25, and the company continues to maintain a zero debt status. To better utilize the cash on books and to maximize returns to our shareholders, we continue to also actively seek inorganic growth opportunities and specifically interested in businesses which provide us a faster go-to-market and provide us with access to cutting-edge technologies and enable us to create a more enabled and tech-ready stack for the various lines of businesses that we are in. We remain strongly optimistic on the Digital India story and will continue to add value to enterprises, consumers, and governments through our unique combination of tech and expertise in e-governance. With this, I would like to hand over to my colleague, Jayesh Sule, Full-Time Director and Chief Operating Officer of the company, for a detailed discussion on our operational performance. Jayesh, over to you.
Thank you, Suresh. And good evening, everybody, and thanks again and welcome all of you to this earnings call. As highlighted by Suresh, highly favorable tailwinds have emerged for us from the Union Budget 24-25, and we are in the best position to embrace these developments and make the best use of our expertise into this space to support the digital transformation of India and develop digital public infrastructure across sectors. Moving on to our quarterly financial performance, consolidated revenue from operations for Q1 FY25 stood at INR 197 crores, down 11% year-on-year, mainly due to degrowth in tax services vertical by 28% on a year-on-year basis, while both pension services and identity services continue to grow by double digits with growth of 13% and 27% respectively. PAN issuances degrew mainly due to election activity. However, the segment will continue to see momentum in the coming quarters on account of strong central and state government focus on introduction and implementation of various government initiatives and welfare schemes. Moreover, Protean also gained overall market share from 50% in Q1 of FY24 to 54% in Q1 of FY25. Our pension services and identity services are expected to see strong growth led by favorable government support and strong growth in overall digital economy of the country. Additionally, our new businesses continue to see early momentum, with Protean delivering several groundbreaking projects of national importance, including multi-sector digital public infrastructure. Coming to our profitability, adjusted EBITDA for Q1 FY25 stood at INR 45 crore with EBITDA margin of 21.1% versus 20.4% in Q1 of FY24. PAT for the quarter stood at INR 21 crore with PAT margin of 9.8% versus 13.8% in Q1 of FY24, a reduction of 404 basis points year-on-year, mainly due to INR 11 crore of provision for doubtful debt. Adjusting for the provisioning, PAT margin stood at 14.9% in Q1 FY25, an improvement of 76 basis points year-on-year. As we have highlighted during our past quarterly calls, we are maintaining a provision for doubtful debts against a sovereign receivable from the tax department in line with our financial prudence policy. Post taking out this provision, the remaining exposure on account of this is INR 17 crore, which, if remains outstanding, would be due for provisioning in FY26 as per our ECL policy. I am happy to state that our balance sheet position continues to remain strong with cash and cash equivalents of more than INR 700 crores. We continue to maintain our debt-free status and are looking to accelerate our internal cost levers at a sustainable rate. We continue to maintain strong cash flows while our investment in people and tech to build highly skilled team of full stack engineers. Moving ahead, I am proud to state that we stand on a solid foundation to help drive the development of India's digital public infrastructure and pair that with a robust regulatory framework. Times ahead are really exciting for the company, and I thank each one of you for being a partner in India's journey towards digital transformation. With that, I now open the floor for question and answer session. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of CA Garvit Goyal from Invest Analytics Advisory LLP. Please go ahead.
Hello, am I audible?
Yes, sir.
Good evening, sir. My first question is on the ONDC side. So just to understand the revenue model on ONDC in a better way, right now we are doing approx 9 million transactions a month, and which is expected to grow at 20 to 30% CAGR, as you mentioned in the presentation. That means by next year, annualized number should be around 50 CR transactions a year. So right now we are not charging anything, but let's say average transaction value is rupee 50, and if we charge transaction cost of 0.5%, which means the total charges comes out to be 7.5 CR. So I have two questions on it. One is, out of this 7.5 CR, how much share will Protean get? And secondly, apart from these transaction charges, what is the stream of revenue from ONDC for Protean, sir? So that's my first question, sir.
Sure. Thanks, Garvit. I know ONDC is a big area of interest for all of us. So I'll just give you a sense on the ONDC revenue model. So currently we are providing the base technology at the DPI level, which is at the infrastructure level. We are today as a technology service provider. We power the entire ONDC network by providing the gateway services, which is basically the network on which all buy and sell transactions run, or rather the discovery of the transactions happen. And we also provide the registry services, which hold the records of the buyers and the sellers and the logistic players. So at an infrastructure level, there is one revenue model. At this stage, our cost of infrastructure and whatever tech development we are doing, that is reimbursed by ONDC. But as we've been saying earlier also, in line with any DPI, this will become self-sustaining, and over a period of time, it will move into a market model where it will be charged on a per transaction basis. So while I know that you've done a assumption of say a 50 basis point might be a sort of a network fee. We are assuming that around 8 to 10 basis points is something we can see coming from the network as a transactional charge going forward, and we are benchmarking it with some of the other DPIs which are out there. But we'll naturally reach that point when there's a certain inflection point at which the market pricing will come into play. Currently, the same is being reimbursed by ONDC as an organization for our provision of services as a technology service provider. Other than that comes the innovation layer, which again falls into two categories. One is at a extension service level, where you are providing various adapter services, connect services, reconciliation and settlement platform, catalog as a service. The other side is where you're providing buyer and supplier technology. These are applications provided to both the demand and the supply side. Now, these are applications which are being provided with an underlying SaaS model in play. So you are largely looking at charging for a one-time fee for creation of the tech or the app, and then you are looking at a transactional model for earning based on that. Now, depending on whatever is the ecosystem charge being paid by the seller or the buyer application, a part of that will flow to the provider of the technology, which is again a SaaS model. So these are the three elements of monetization that we see in ONDC. At the infrastructure level, which is again transactional in nature, and at the innovation level, split into extension services and demand and supply technology.
Understood, sir. And sir, any timelines like when this scheme will start kicking into our top line?
So see, we are already being at the infrastructure level, as I said, we are already being reimbursed by ONDC for the services we provide. It is more about the model moving from being paid by the network facilitator to being paid by the network participants for usage of the network. On the other side, we've had a few customers who we have onboarded both on the demand side and the supply side. And likewise, we are also working to provide other extension services to the market. So those revenue streams are coming in. But naturally, at this stage, we are again looking at the adoption of the network and whatever we are doing to contribute towards that adoption. This is early stage at this stage, but we are already getting revenue on these lines of business.
Understood, sir. So secondly, on our other verticals, like Government of India has also passed 1.5 lakh CR budget for employment skilling, and we are also working on one of the platform called Honest. So I want to understand what is the update on this decentralized network, where we are standing today, and what about the other key initiatives like AgriTech, etc. So when do you think these will come meaningfully to our top line?
So see, all these are today contributing elements for us into our revenues, and I'll just give you more a sense of the stage where we are in these verticals or in these sectors. When we look at education and skilling, as we've spoken earlier, the company is already invested and working in the space of education finance. We've been running for the last 7 to 8 years, we've been running education financing portals. One at the behest of the government, which is called Vidya Lakshmi, where we provide education loans. And second is more scholarship ecosystem being created under the product offering of Vidya Sarthi. Now, when we look at a DPI approach to it, that is where Honest came in, when we decided to move these assets into discovery on an open network, just like ONDC. So you can come in through multiple apps, not just on our website, and you can likewise discover offers of loans or scholarships on an open network. So some of our assets, as such, we've already, in a way, made them discoverable on an open network, and we've had some early distribution of scholarships and all happening on the Honest ecosystem. The other area, again, to add, just like ONDC, we are also, for Honest, providing the infrastructure technology at the gateway and the registry level. And that is again something, as you are aware, the Honest ecosystem is now running on the ONDC rails only. So we again get reimbursed by the network facilitator over here. So we are already getting revenues coming at the infrastructure level for the education and skilling ecosystem. and we also have some revenues coming from the scholarship disbursement on the same. With regard to agri, as we've been saying earlier, we got the mandate from the central government to build the core agri stack. Largely the work done by us was in terms of building the protocols of data exchange between center and state, building the consent framework for sharing of data. And that is a work which we were working and continue to work on. Now the agri stack is in a stage where almost 13 state governments are in the process of doing a POC where data exchange will be enabled, and multiple use cases, as we called out earlier, related to lending or related to insurance or advisory will start flowing through the agri stack. Again, for the agri stack, we have been reimbursed for the work we done on the core agri stack, and we continue to see, look forward to multiple use cases coming for us to create more revenue pools coming out of the innovation layer on top.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your question to 2 per participant. If you have a follow-up question, I would request you to rejoin the queue. The next question is from the line of Apurva Sharma from Bugle Rock. Please go ahead.
Yeah, hi. Am I audible?
Yes, sir, you're audible.
Yeah, thank you for the opportunity. I just wanted have a few questions. I'll just one by one. Can you throw some light or color on the opportunity size for eSign Pro? And I'll ask the next questions.
Yes, so Apur, eSign Pro is all about, enabling a paperless journey. Your ability to sign a document digitally. And we are also under the eSign Pro documentation suite, we are also offering e-stamping services. Now the market opportunity is that it can basically be playing a role in each and every account opening. Today when you are opening an account and you have to submit a form 6061, it can be digitally signed, so you can enable an end-to-end digital journey. Similarly for any sort of loans, especially when you're talking about business loans for MSMEs or, MSME again is a focus area for the government as called out during the budget also. So all these loans which will get created where you have to do any sort of contract signing, the loan contract, and you have to e-stamp it. So eSign Pro will again be looking at that as a market opportunity. So in my mind, the entire ecosystem of digital onboarding, digital lending, account opening, both for the individual and the business sector, is a complete ecosystem out there that is available to us with a product like eSign Pro. eSign Pro is something which again for us is a vertical integration. As you are aware, we have a very strong focus on provision of foundational identity. We are the only company in the country today which provides all 4 facets of it, from eSign to eKYC to e-authentication to online PAN validation. eSign Pro just comes atop that as a digital signature service, and we see a huge market opportunity in that.
So basically, because we provide the entire stack, you see traction on this eSign Pro maturing in some time, or I mean, how do you see what is the time frame that we are looking at? I mean, I'm not asking quarter by quarter, but just when do you see that?
So if I give you a sense at the foundational level, when we are providing eSign as a service to enable other entities to run, say, an application like eSign Pro, there we almost have a 70% market share. eSign Pro is a app layer built on top of eSign services, so which basically means any corporate can adopt it and they can digitally start signing their documentation. A bank can adopt it and make sure that the consumers can do an eSign Pro based signature on the loan or the account opening documentation they are submitting. So to us, it's a business which is already we have some customers, and it's going to be an immediate, immediate consumption, if you may. So it's not a timeline in which we will be sort of looking at a market getting created. It is happening day in and day out. And as entities like, especially the BFSI entities, they are looking at making paperless processes. This becomes a very core component of that.